Good morning. Welcome to the Jesus Before Money podcast. Today is Thursday, June 26th, and I just want to give you a quick market update. Today we're going to look at the SPY and then the 11 sectors of the SPY, and I'll talk a little bit about what I see and what might be coming. Okay? So my first video, I was on the SPX, and I mistakenly said that the breakdown occurred on June 5th when Israel attacked Iran, when that war escalated. Okay, it was actually the SPY. Sometimes I got a little confused. I was like, wait, what? But anyway, right here, where this met and this met in time, these two trend lines were telling us we're about to break down. And what was interesting, if you can see at the bottom, it was Thursday, the 12th of June. That evening is when the bombing occurred, when that war escalated, right? Everyone, it's been going on for a long time. So it's not like it was a new thing. But that's when Friday the 13th, we fell down. And now we've been chopping sideways, and we're starting to head up, I think, is a unrational, unhealthy move here. But still, the SPY, this is a 4-hour chart, so this is where we're at. We're right into major resistance today. The question is, do we actually create new all-time highs amongst all this resistance? I don't know the answer to that, but we'll see. Another thing I want to point out here on the SPY is what happened on Tuesday morning. I think the ceasefire came Monday, Tuesday, and then there was talks about a ceasefire not happening, but look at that candle. I mean, that's a 3% drop on the SPY. People were pulling their cash out. They were pulling their cash out like crazy. This is only a 4-hour chart, so this is 4 a.m. in the morning. We had almost a 2.75. It was like, I think it's 2.75, but call it 3% drop in 1 hour. I mean, that's amazing. Just to be bought up. And what's crazy about that is if we go since Tuesday, the SPY has really gained 3.5%. But this is my biggest concern right here, is if the ceasefires don't go accordingly to plan, if war escalates or whatever, woof. And this has already created a wound here. This has already now cleared the path for downside. Does that make sense? Because this is weakened. Every time you hit a level, you weaken it. So that's very interesting. Something to keep note of is if this market turns, it might turn quickly. Okay. Another thing to keep a note of is if you can see this, the XLY. Now these are the 11 sectors. The XLY, XLV. I'll go through them, but the XLY is consumer discretionary. Okay. Yesterday we had a big update in the markets, right? Consumer discretionary not involved, down 1.18% on the day. And you could say we're bull flagging, but not even near all-time highs, right? The XLV, which is healthcare, was up. It was one of the only ones green besides technology. The only sector green besides technology. That was a technology-based rally yesterday, which is not healthy. 2 out of the 11 sectors of the SPY participated yesterday. This is not a healthy rally. This is a sign of exhaustion. But for safety, I think there are some plays in the XLV in the healthcare sector that pay dividends. That's probably good. And then look at this wedge. We had this wedge, broke out, retested, and now it's moving higher, right? It has this resistance, this pivot point has already been tagged. So now that kind of clears the way, but you're going to run into a lot of resistance here. However, these stocks pay dividends and it's not at all-time highs. Could be a play to talk to your financial advisor about. But if this market sells, everything will sell. Okay, so there's something to keep note of. The XLU down 1.34%. This is utilities. And you can see utilities, have been way up here in the sky. I mean, sure, this is a sign that of an unhealthy market when people are buying utilities for safety for the dividends, and then essentially they know you have to pay your utility bills essentially. So they can't say it as a safe haven play, but there's no safety when the market sells. And what happened? The market was up huge yesterday, and this is down 1.34%. Okay, the XLRE. This is real estate, right? That real estate market. Oh, it never. I mean, not even near all-time highs, right? And then look potentially maybe a little shoulder. Well, the neckline here is a pretty vertical neckline, but this is not a good sign for real estate. Okay, down 2.44% yesterday on that big rally. You know, they like to get their pom-poms out when the stock market rallies, but they don't tell you the underlying, symptoms. Okay, XLP. This is consumer staples. Okay, once again, these are staples. These are things they think that people can't live without. Near all-time highs in shopping here. Are we going to push higher, or is this going to be kind of a rounded top? Maybe this is a head and then a shoulder. You know what I mean? That was down 1.34% yesterday. Another signs that this market is not healthy. XLK, this is winner, chicken dinner, right? This is technology. This is the big tech stocks. We could run a little bit here, right? There is a parallel that I've been tracking, but we broke this trend line and tagged it yesterday. So will we pull back? And we broke out of major resistance here across the top. So all I got to say is not a lot of room to run, okay? And it was up 0.85%, while everything else was down. So when this reverses, watch out. XLI Industrials, still up. It was down 0.88%. But like I said, industrials way up here, utilities way up here. These are safety plays. But there is no safety when the market sells, down 0.88% yesterday. XLF, this is financial sector, right? Financials, I got this parallel I've been tracking. And we're up. I actually need to probably adjust this parallel. It's been a while since I kind of gone through the TA here on these things. Let's see if that makes any sense. There you go. Kind of connects those bottoms. Let's see if it kind of connects the top here. It's amazing how parallels work. Sorry I'm doing this. Kind of wasting some time. Boom. Tagged there. Tagged. That's a nice parallel. Actually, it can be refined a little bit. Parallels are amazing tools. But anyway, what do we see here? Shoulder, head. We broke and retesting. Are we going to move higher? Not a lot of room to run in the financials, right? And we know that a lot of people, credit card debt is outrageous. There's a lot of defaults starting to happen in the mortgage industry and commercial real estate, and now private real estate. I guess I can't remember whatever the term is for that. But I'll just be careful. I think there are a lot of plays in the financial sector that are really good shorts. Okay, XLE Energy. As we talked about yesterday, this is probably the one that's going to run the most. I mean, I think that oil is going a lot higher. I kind of have this little mini parallel here, kind of hugging the midline, but I see this as a major bull flag. The little slanted up, but I really like the XLE out of all of them. XLC Communications. What do you see there? Double top. Be very cautious. XLC was only down 0.02%, so it's still hanging in there. And then the last one we got, the last is materials. And once again, materials is way up there in the sky. And the reasoning behind material stocks being high, I guess, is a safety play. Maybe the onshoring in the United States, but once again, we're way up here. And we don't have a lot of room to run, so be very careful, right? The thing you need to watch the most, just to leave you a little tidbit here, I'm going to go back to the 4-hour, is the XLK. The XLK upsloping wedge, it broke out, right? It broke out. That's on a 4-hour chart. So on the daily chart here, We've had 1-2 solid days, but look, boom, we literally have to gap up. So they have to push this market up in the morning. This isn't retail investors pushing this higher. This is the institutions. Institutions play games to take your money. We are exit liquidity. So be cautious. I'm telling you, my little red flag is up. This market's going to turn, and it's going to turn hard. Okay? So how much longer can we really run in the XLK before we get a pullback? I mean, before we top out, 1.8%. 1.8% in this parallel. Parallel can be adjusted, but be cautious here. Be cautious. Here, 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 and here. And I might even have to come down to account for that top, so be very cautious. Okay? And I'll leave with it. And I will leave you with that. I hope you enjoyed. If you want me to do any TA on something specific, please leave a comment. Please give a like, and I will see you tomorrow. Bye.